Hey, this is Brian Briscoe, partner at Four Oaks Capital and host of this multifamily mastering meetup. Now, in this particular video, I talk with my friend Nick Moore, who's a real estate attorney practicing out of Atlanta, Georgia. And I encourage you to reach out to him if you need his services, and his contact information is going to be in the video description. But before we get to that, if you like this content, number one, hit the subscribe button. Super simple. So you can be notified every time we post something like this. But if you really like this content, you should join our Tribe of Titans multifamily educational community, where we have many more events like this that are exclusive and for members only. So stop what you're doing, click the Tribe of Titans link in the description to this video, and get yourself 30 days to experience it for yourself, free of charge, 100% risk-free. And you can find out why our members call it the most bang for your buck around. And now, here's Nick Moore. All right, so welcome everybody. Full house tonight. Just want to welcome people to the group. We have Nick Moore with us tonight, who is an attorney by practice. And any attorney jokes, throw them in the chat. But we're going to talk about a couple of things today. We're going to talk a little bit about the SEC and maintaining compliance. But what I really wanted to talk about is this idea of a fund. I know a lot of people, there's different vehicles to raise money. Nick he's going to talk a lot of specifics with us, but all of these vehicles to raise money, my understanding, are typically exemptions from SEC, from other different laws. It's like, if you do X, Y, and Z, you don't have to go through a mountain of paperwork, time, and money to be able to register with appropriate entities. But so we're going to talk about some of that tonight. If you have any questions, we got two ways of doing that. Towards the end, we will definitely open the floor to questions. Midstream, if you have anything, drop it in the chat window. All right. And we can pause and answer questions as they come up. But definitely drop it in the chat window. So that's kind of rules of the road. And if we're not explaining things right, or need to go deeper into something that somebody wants to see, I think that would be great. So, that said, Nick, so welcome. Thanks a lot for spending some time with us today. And how you doing?
Man, I'm awesome. Like I said at the outset, man, just humbled. The fact that we've got 60 people here is wild.
Yeah.
That's a big group. I'm on LinkedIn quite a bit. And so, being able to participate, in your program, I've got a couple others lined up, actually some in-person stuff at the end of this month. So what I'd like to do this evening as kind of a prelude to some of that is share, of course, the content and flow with some of the questions. I've got a little bit of content in a slideshow, but that's just to help keep me on track. Because while I'm excited to be here, man, I've been known to blabber. So hopefully we can keep it confined to some extent. But short answers, I'm doing great, man.
Awesome. Well, before we get to the content, a couple of questions that I have for you. Number one, rewind the clock a little bit. What made you want to go to law school?
Awesome question, man. That was like back when I was like a human being, and I've just been blessed with just an awesome family. And I've got a dad who is just ever present and really just encouraged that part. He's not an attorney, but always wanted to be. He was a mortgage broker in the 80s and 90s. So he did well, and then hit the slide like everybody did in 08 and pivoted, and fortunately recently retired. But he was always there encouraging me and kind of cultivating that interest. And then the other maybe 50% credit. I mean, there's certainly more than that. I've had just so many awesome people in my life, but I actually had a college roommate. And I'll be honest with you guys, as a human being, and I'll be raw and vulnerable tonight, I've not always been this wild, motivated, entrepreneurial, brain, frankly. I'm barely that now. But in early college, as many of us were, we were a little bit more focused on the extracurriculars than we were their curriculars, right? And
Mhm.
so I had a college roommate who was like, "Hey, man, you're smart, and the things that you say, in conversation are not profound, but they're intellectual.
Mhm.
And why don't you take this political science course with me and let me know, your thoughts, and we can engage in discourse, right? Political
Mhm.
discourse." And so I signed up for a class and got into it. And most, I mean, you can take economics, English and some other majors to get into law school, but ultimately I chose political science with the legal studies concentration, and just fell in love,
Yeah.
with the material. And so it was a logical next step. Once it's amazing, because before I made that decision in undergrad, I wasn't doing very well. I was just surviving, if you will.
Mhm.
And then once I picked my focus, I finished with consecutive dean's list and president's list, just to prove to myself that I had, what it takes. And then was able to, use that as a springboard into law school, and
Mhm.
ended up doing well there. And got into the corporate stuff that I always loved, and ended up booking the class, getting the top grade in corporations. And then later learned commercial real estate, which maybe we'll talk about in a moment.
Yeah.
But all that just compelled me to go there, and I just wanted to be in the boardroom to some extent, and knew that I could, be validated to a great extent, just by virtue of being an attorney. And so
Yeah.
that's really come to fruition, which tells me it's a God thing. So it was
Yeah.
a great decision.
And I look at what I've done, and there was a period of time, spent 20 years in the military, and I get this thing called the GI Bill, which pays for, 36 months of schooling. And I would say there's probably a 3 to 4 year period where, my primary after the Marine Corps thing was going to be law school. And that's what I wanted to do. But what I realized is I was going to use the law school to kind of do a circuitous route into real estate, because it was like, I'll go to law school, I'll learn everything I
Me
can
too,
about
man.
real estate, and then eventually I'll get in the real estate industry. And I think I realized I could shortcut that, but and now
You
my
can.
my daughter and my wife are using my GI Bill, so ended up
Well,
working. So
that's amazing, man. My stepsister did the same thing. She went to University of
mhm,
Tennessee for the cost of a
yeah,
in-state, in the in-state tuition.
yeah,
But you're exactly right, and that's kind of how I thought about it. And then, um, should I just jump off kind of into my
yeah.
background a little bit
Let's
and how I
jump.
got into law?
Yep.
So in about 2017, I left my first corporate job. Corporate toxicity. I know all 63
Hmm.
people on here know what that's all about. And it just didn't sit well. Like I said, I kind of got into that overachiever mentality and was trying to just break through every glass ceiling, and there was just one at every level. And I was about solving problems. I was doing
Hmm.
telecommunications real estate, and installing cell towers, and had the largest site count in the company. And for all intents and purposes, was loving it, because I just was so happy to be doing law, being a lawyer,
Yeah.
and just doing my best. But the corporate toxicity really took a toll. And I
Yeah.
remember walking into the office one day, and I'm looking at these walls, and their color scheme was hilarious. It was like this super bright blue that, like, almost made your pupils just flutter. It was terrible. And I just remember thinking, this is not the next 30 years. Like,
Yeah.
no way. Like, I'm meant for so much more than this. And so, again, I'm a man of faith. I just took a leap. And
Hmm.
one day, I just reached my breaking point, and I walked into my director's office, and I was like, all worked up, "I'm leaving." She's like,
Hmm.
"For the day?" Right? And I'm like, "No, like, I'm leaving the company.
Done.
Like, I'm
Yeah.
I'm done." And so that was it. That was it for me. And I remember being in the exit interview, and I'm looking out the window, and I was like, "God, I don't know where we're going, but just hang with me, kind
Yeah.
of Jesus take the wheel kind of thing." And that was it. And obviously now, looking back. So when I had left, one of my colleagues at the time went into legal recruiting, and I was kind of moonlighting, doing corporate stuff, and enough certainly to eat. But he had posted on LinkedIn and was like, "Hey, overflow opportunity, part-time, yada yada." And I'm thinking, well, what a great way to supplement my workflow now. Let me
Hmm.
see, what this opportunity is about. And I ended up linking up with my now law partner, Todd Robinson, who
Nice.
is my mentor. and best friend. I mean, we were playing golf on Saturday. We both have young kids. Our wives are the same. They run the household. And so he had sent me, some material and was like, hey, work on this. And it was,
Yeah.
multi-family deal. I've been in commercial real estate since 2012.
Yeah.
But really specifically in multifamily since about 2017,
Mhm.
which is wild to think of the deal volume that I've been able to do in a short amount of time. I think it was Jonathan, we were getting lunch and he's like, wait, how long? It's like, I thought
Mhm.
you've been in the game 10 years. I'm like, well, keep that perception, but
Yeah.
no, just about 5. But nonetheless, so Todd had sent me this assignment, and it was he was wanting me to put together the corporate structure on a multifamily deal,
Mhm.
and I'm to inquiring of a mind, to just do the work and not think about it. I was like, well, what is this? And what is that?
Yeah.
What is this? And what is that? And then before you know it, as all 68 now people can relate, multifamily is like, wow, like you get in and it's just, there's layers to the onion. And you're like, well,
Mhm.
I want to understand that. And how does that relate to that? And how
Yeah.
does it get on back? And you can get what returns,
Mhm.
and things of that nature. And I got as excited as all of my clients. I mean,
Yeah.
you can ask any of my clients who talk to me on the phone, like, I'm fired up for you.
Yeah.
I understand, the opportunity that you have here. And so it was easy for me, uh, just to continue.
Mhm.
And I'm background in sales. I'm really a salesman with a law degree.
Yeah.
Spoiler alert. But ultimately, enjoying it, enjoying the people who are in it. They love it. I love that they love it. I love what I do. I love what I do. Um, and so for me, bringing that passion to it, and joining, these meetups and being able to share a little bit of wisdom,
Yeah.
right, and being able to help you accomplish your goals and feed your family, and break out of your toxic corporate environment, just brings me, I mean, just joy, just
Yeah.
just pure joy. And so now I'm a partner at Robinson Franzman and just have a beautiful book of business. We're growing like crazy. We've got 17 staff members now. We're actually going to merge with an undisclosed new partner. We're trying to
Mhm.
finalize some things there. So stand by and wait for an announcement. Be sure to follow Robinson Franzman LLP on LinkedIn so you can catch all those updates and some other news that we send out here and there. But now being in a position of leadership and cultivating the best in my staff and being able to help them grow and again feed their families is another layer of joy.
Mhm.
And so, man, I'm just blessed.
You're full.
Just
Yes.
totally blessed.
So, you mentioned a little earlier, how much volume you've done. Have you kept track of how many multifamily syndications you've been a part of as far as an attorney?
Yes, a lot.
A lot.
No,
Okay,
but
good. Yeah.
no. Let me describe it in words, not
Yeah.
numbers. But no, man, I mean, hundreds of millions of dollars.
Hmm.
I mean, billion.
Hmm.
I really have no idea. Honestly, I'm more concerned about getting the product
Yeah.
out to my client that, I've never really tracked it, to be honest with you. I can tell you between the months of late October, there was a 30-day stretch last year where I did 270 million or something in a month.
Mm. Wow.
And so, and that was just transactional volume. I've
Hmm.
got a number of clients who I've yet to really truly reprimand. So let this be your reprimand, who transact on standard form broker contracts.
Hmm.
Shame on you. Okay. And then they'll bring me the syndication work. And I'm
Yep.
here to tell you, bring me the whole thing. In fact, unless you're an attorney in
Yep.
focused in multifamily real estate, right? You don't know what you don't know. And
Hmm.
having somebody with that wisdom to prepare things and provide for things that are general unknowns. That's why your contracts, could be 25 pages. And some people are like, oh, that's too long. They don't want to read it, this, that, and the other. Now, where you
Hmm.
run into a roadblock oftentimes is where the seller demands it, right? The seller's like,
Hmm.
well, I'm just not going to read that. or they
Yeah.
don't want to pay an attorney. You find that a lot with owner operators, and y'all know what I'm talking about.
Yep.
But there are people who bring me just the syndication piece. I don't really track. I mean, man, now that you mentioned, I mean, yeah, easily over $1 billion if you
Nice.
factor in the raise amounts, transaction amounts, and other things.
Yeah. Now you make a good point. When you look at different attorneys, some people will come in just for the syndication piece. So when you look at the services that you offer, sounds like you're basically a cradle to grave. Bring in, you do part of the contracting, you do the syndication, take it all the way through closing, and then a little bit further. Can you just go ahead and describe kind of your range of, where's the best place to engage with an attorney like you, and beginning to end, what services you provide?
Yeah, so you're exactly right, Brian. So
Yeah.
it's inception to conclusion, soup to nuts, cradle to grave,
Mm-hmm.
all the idioms. Okay. Because it is. We even own a title company.
Mm-hmm.
And so at the end of the
Nice.
day, if you transact in the Southeast, we'll draft up, underwrite, issue title commitments, pro formas, et cetera. We basically do everything but your survey. I've got a great survey contact. So in effect, we do that as well. But as some of my clients can attest on here, and would attest, I hope, I'm actually pre-LOI, right?
Mm-hmm.
And here's a unsolicited tidbit. Pre-LOI and LOI can honestly be the most critical part of the acquisition process.
Mm-hmm.
Okay. The reason being is if you bring me a fully executed LOI, I can't really walk anything back.
Yeah.
Okay. I can't go back to the operator and be like, hey, by the way, I need a 5-day access period because my client's putting $250,000 hard down. He didn't know to ask for that. Sorry. Right.
Mm-hmm.
We're going to be like, dude, no. Right.
Yeah.
We already it's not in the LOI. It's the broker's favorite thing to say. And then if the broker doesn't say it, the seller will. Right.
Mm-hmm.
So you need to create that expectation when you engage that seller's broker or the seller directly, whatever the case may be, or if you have a buyer broker who's going to be communicating, you want them to know, here are our expectations.
Mm-hmm.
Okay. And your leverage is how much money you're paying for the property, right? And how aggressive your timelines are. So you have leverage, you have a solid ground to say, hey, here's what we're demanding. And it includes an access period. I'm going to require a review of these financials that I would otherwise ask for in due diligence.
Yeah.
Now, your counter to that, the compromise that you can do to seller, for seller to kind of get that, is that you would shorten perhaps your due diligence timeline, right? Like, let's not do a 30-day or 30 business day or whatever. If you're going to give me sort of the crux of what I'd be asking for anyway, maybe we'll do a 21-day. I've seen as low as like 14 days, usually less than that.
We did 14 on our last one. Yeah, we did 14, and that was, I mean, it is a seller's market. It's very competitive, and and just to kind of jump in from what he said, there's a lot of sellers. I mean, the market is almost demanding hard money as soon as your contract is signed. And he mentioned a couple of things that can get you around that. Early access. Once you have an LOI signed, you can have early access. You can have access to the financials and everything else, which essentially, is like a pre-due diligence where you can start doing your due diligence before the contract is signed. And then once that contract's signed, you're a lot more comfortable putting down, your hard money, and then other things you can negotiate with, like he said, 3 years ago when I started, a 30-day due diligence period was standard. A 1% earnest money deposit that was refundable was standard. The pendulum swung completely in the other direction, but you can also shorten your due diligence time to basically give the seller the confidence that you guys are going to either close, or he's going to know very quickly that you're not, and have a little money to be compensated for it. So a couple of good pieces of wisdom right there to negotiate the current market.
100%.
Yeah.
Spot on. A+. And it feels like less like a wager. I mean, look, let's be honest. It's pretty sort of disconcerting when you know that you have that much money out there. But it's also normal. Everybody, and I want everybody to know that I come from a place of empathy. Like, I know how you feel, and that's why I draft. I put things in the contract to try and protect all of that, to give you the peace of mind that you have all the outs you can get. Ultimately, as a business decision, you need to determine, what exposure and the extent of it, and sort of the refundability of that earnest money. But ultimately, I'm going to do everything within my power, kind of LOI or not, because much of that's not really negotiated in the LOI. But I will do my best to work in the margin and protect that as best I can. Particularly misrepresentations, certain conditions on the property that you couldn't otherwise discover, perhaps without third party reports. Sometimes you can hook it on an appraisal if you're doing a loan assumption, things like that, so that it feels less like a wager. Now, obviously, that has nothing to do with raising capital, but I since I am soup to nuts, I like to impart some of that. But yeah, so ultimately, do the PSA. I handle all of that for you, negotiate the whole thing, get your authority, get the sign off, get it fully executed. We'll jump into our timelines, generally approaching the conclusion of the due diligence period. Once it looks like we're going to lift the contingency, I will go ahead and start undertaking drafting your documents. Early on, hyper ambitious me would start your paperwork day one, and then they'd terminate. And then it's like, well, I kind of did these docs, and then it's tough to kind of go back and ask for, to be paid on it. So I generally talk with my client about what the expectation is of getting those documents created. Then the hard part is, with all of the business that we have, trying to deliver those as quickly as possible, because everybody wants their documents yesterday. Okay. Just be somewhat, while you absolutely deserve your documents as quickly as you can get them, and generally on the timeline that you dictate. Better attorneys do have volume, and we're working through that. And it's our responsibility to hire out and bring the sophistication and the capacity to be able to handle that volume. Okay, so that's on us. But generally 3 to 5 days. If it takes you a couple of days to do a review, it's kind of like you don't fall to the back, but something else will have been prioritized. Where I have a client, and this is imparting some more wisdom. Be there with your documents. Get that red line, turn that red line around. Show me you're ambitious. If you take a day, I might take a day. If you take 2 hours, I might just bang, bang, turn it around for you. But just know that the faster you review, synthesize, comment, or approve, the faster we can work you through that workflow, and we'll get you done. Squeaky wheel gets the grease, particularly Robinson Fransman. If you let us know and you're front and center, you're going to get taken care of.
That's a good point.
And then, oh, I'm sorry. But yeah, so from there, then of course we do the PPMs, subscription docs. We'll do your Form D registration. We'll also do, your blue sky filings, which are state specific, of course. My staff, they ask for the investor list, and then we'll go in and do those registrations. And then depending on the type of offering that you have, right, 506B, 506C, we will form or file your Form D accordingly. And so so that pretty much rounds all that out. Then we move to close. I do all of the lender due diligence, knock out the checklist for you, move to close, do the title work, title objection letters, and really just comprehensively make sure that the transaction is up to snuff. Then we close it. And then, if we need to do any post-closing prorations or something like that, I'm of course available to help through that, as well as any other operational kind of issues from a legal context. So it really is as you stated, Brian, very comprehensive.
Yeah. And I think just my recommendations, I think a full service attorney is a lot better than, one attorney here, one attorney there. I mean, even when you're dealing just with a syndication attorney and a closing attorney, if you can find somebody that you like that's a full service attorney, go with that person 100% of the time. Let's shift gears and start talking about, funding the deals, raising capital here. So there's a lot of do's and don'ts, and there's a lot of things we have to be aware of. And I think most people are familiar with 506Bs and 506Cs. So before we get into the funds, can you spend a couple of minutes just really quickly what a 506B is, what a 506C is, and maybe some of the do's and don'ts with each one?
Yeah, for sure. So obviously our bread and butter is a 506B or 506C, and people are like, well, what is that? Well, that's under Regulation D, right, of the Securities Act of 1933. Okay. Back in 1933, post-depression era, after everybody just lost their butt, right? The federal government wanted to figure out how they could protect sort of the the unassuming,
Mhm.
that's not necessarily the word I'm looking for, the unscrupulous.
Mhm.
Okay, people who are like, hey, I've got $20, I have no idea what you're talking about, but if you tell me I can make 10 on it, here's my 20. Right. And so that just got all of America, frankly, obviously in the worst financial condition that we've experienced as a nation. And so in the Securities Act of 33, every security had to be registered. Okay, so you had to register it, get it approved, etc. Well, Regulation D actually provided for exemptions, and the reason being is that the registrations were really a restraint on trade.
Mhm.
Okay, and because of how onerous and expensive and arduous it was to get these filed, they wanted to switch gears and provide for, hey, if you comport with these few requirements, you actually don't have to register, but you do have to notice us that you are making an offering, and we call it a private offering.
Mhm.
Okay, a public offering would be like something publicly exchanged, or some other registered security. So we do these private offerings, the hallmark of which is that they're personal and they're personalized. And my templates typically have like a packet number or an individual name. And people are like, well, can you remove that? I'm like, yeah, sure. But the code specifies that it should be tailored to the recipient, and it's not so as to avoid the perception that it's a general
Mhm.
solicitation or a general offering. Okay. So under those, the federal government also determined that, hey, we're only going to do allow for exemptions to accredited investors.
Mhm.
Okay, and everybody bear with me. I'm going to get to the non-accredited in just a moment. But the federal government said, yes, you have to be accredited to be able to qualify for these exemptions because you have the financial sophistication and ability to get counsel and other representatives to determine the suitability of the investment. And as most people on, in this meetup have probably experienced, there's a suitability of the offering
Okay.
and suitability of the investor, right? Does it fit your appetite for risk? And that's why we put 50 risk factors in there and disclose and disclaim to the nines, which is what the purpose of the private placement memorandum is.
Mhm.
It is not a contract. It is a disclosure document. Your subscription documents and signing onto the counter signature page of the operating agreement are your real contracts. Okay. But the government said, well, maybe just having everybody be an accredited investor can also be a restraint on trade. And
Mhm.
so they said, well, perhaps we could allow for up to 35 non-accredited but sophisticated investors who can invest in this offering. However, provided, however, that that the person,
Mhm.
the offeror, and conversely that the offeror know the offeree. And
Mhm.
that's why we don't have to do the third party verification. And we'll get to that in the
Yeah.
506C in just a moment. So because of the intimacy that the SEC expects by virtue of that close relationship, you just have to have the reasonable belief that they are accredited. So it's more of a kind of subjective standard at that point. It's more objective, of course, in a C, but in a B, it's subjective. But you still have to be reasonable.
Mhm.
I've sat in the SEC. I have, like I said, at the outset of this thing, I've done litigation. I've done SEC litigation. Okay, and I've sat there with Melissa Mitchell in the Atlanta office. Fantastic attorney, super smart, knows every answer to every question before she asks it.
Mhm.
Okay, and so I'm like, hey, if you sat in front of her and you knew that she knew the answer before she asked it, and she asked you if you knew that person, what are you going to say? Okay, and so 3 touches, y'all. That's really the hallmark of trying of at least, at minimum, okay, have 3 touches with a particular offeree before soliciting. A solicitation is the actual exchange of the capital for the security. Okay, it's not just receiving the PPM or anything like that necessarily. It would be accepting the money, but you need to think of it as the issuance of the PPM because everything is perception,
Mhm.
right? The law and the code is abundantly clear that the first that your first interaction cannot be born out of the solicitation of the security. So
Mhm.
said in layman's terms, the first time you talk to them cannot be soliciting their investment. Okay, it just can't be, because how could you possibly have this intimate relationship or intimate enough, right? We're not
Right.
going too far, but to be able to know that person.
Mhm.
I've got a colleague. who I need not mention his name. Some of you may know him, but he says, somebody like, and trust, and which two of those are, whatever will it be, right? And it's a great point. But the ultimate point is, in a 506B, know them. Of course, you need to like them and trust them, otherwise you're not going to get the investment. But the SEC doesn't say 35 non-accredited investors who like you. Okay, yeah. It's not, that's not the hallmark. It's do you know them? And again, that's why I encourage some of you, and Brian, I know you do this, you have these educational platforms and you're able to capture larger audiences and cultivate these relationships such that, to the extent you do a 506B, those persons are available to you. Yeah. And so that's the best way to run a 506B. On the C side, a little bit different. You can do general advertising, but because that whole intimate relationship thing is not required, you have to verify their accreditation status. You cannot take there's no 35 anything. It's an unlimited number of investors. Same with a 506B, but you have to verify their accreditation status. And there's a number of third-party service providers. You can link to your portals. You can send them there. They can have, opinion letters by, financial representatives sent to confirm those things. But that is a requisite of the 506C. But again, you're able to generally advertise, build up your track record first. If you come to me and you're a first-time operator, you're like, I want to do a 506C and generally advertise. I'm like, fantastic. What's your track record?
Yeah.
What am I putting in the bios here? Because you're only as good as your board at that point when you're generally advertising, because people don't know you from Adam. So generally you see people starting with 506Bs and then shifting later once they've got a performance history to 506Cs, generally advertise and have greater success. Not saying you can't, just in my experience, my perception is that 506Bs are a little bit better for the newer operators because they're going to those people that are arm's length, from them versus, branching out.
Yeah. And I agree. I mean, we've done 10 506B syndications and 0 506Cs up to now. And eventually we'll do one. I think that's a good, it'll be a good next step for us. Real quick question. Most appropriate way to track 3 touches? Would you recommend people keep like a spreadsheet, or how would you recommend, as far as, when you're sitting across the table from the person you mentioned, and she already knows the answer to the question. How do you document that?
Well, if it really came down to defending yourself, you would just pull up those electronic communications, or you could say, hey, listen, I had the phone call here. I haven't found them to be so scrupulous that they would go down to a phone call when we're talking about sort of the quality of the contact. Most of the time, look, the SEC is really busting the perpetrators who are violating Rule 10b-5, which of course is fraud, right? People that are representing something and doing something differently, or not representing it at all and then doing whatever they want. Okay, those are the 2 biggest no-nos. And typically a whistleblower is the one who brings up SEC issues. So said slightly a different way, and without relying on this, because don't go do things necessarily, like this is not advice, this is just my observation. I haven't seen anybody policing this where they're like some portal. Now, when you register your offering, you're putting materials in front of them. It is sort of, to some extent, Wild Westy, as we've probably all experienced, or at least seen to some extent, when it comes to these offerings, because people are like, oh, well, no one's going to pick me because it's smaller. But just know, if you don't perform in alignment with your pro forma, you are running the risk of somebody wanting to blow that whistle and say, hey, listen, I don't think that this person ran this offering correctly. And so we need an investigation to find that out. Okay. And that's why it is best. And I implore you to do everything the right way and to consult counsel on how to proceed. Because somebody may knock on your door. Right. Okay. But ultimately, if you could say, hey, look, here's the emails that we exchanged. You can check my phone records. I had a phone call with them, this day. And if your story matches the subject, and that subject is an investor, because they don't care if he's not, and he didn't invest with you, it's a non-issue. He would have to invest. And if your stories are in sync, then they move on. And again, generally they know, because they have power of subpoena, and they can get all these documents and look at all of these things before they even ask you the question.
They probably already have your emails and your, exactly.
Are you kidding me? I've seen them. Yeah. I've seen them had bank records, and they're like, well, tell me, did you do this? And it's one of those things where you're like, yes, if the answer is yes,
Hmm.
but ultimately just have three touches. If you feel comfortable enough sitting in front of an enforcement official who could make you or break you, be on the right side.
Yeah. Okay.
Be on the right side of that.
Good answer. All right, let's shift focus right now to the funds. I hear a lot of people talk about funds, and I know it's not exactly an alternative to 506B or C, because I think you're still falling underneath the 506B or C. But can
It
go ahead and just
includes it.
talk about
Mhm.
what exactly a fund is, and what's the difference when you're raising capital through a fund, and what it takes to actually set up a fund.
Yeah, great. So here's the good news.
Hmm.
So what we're talking about really is a private investment company, generally speaking. Okay, now
Yeah.
you can create funds that are under some of these smaller models, but ultimately, if you are a fund and issuing securities, and your strategy is to invest in other securities, not direct to the commercial real estate, but to
Hmm.
an LP position of another sponsor's deal, you are a fund of a fund.
Hmm.
Okay. And that is typically best captured in a private investment company. And that's a conjunction of Securities Act of 33, Investment Company Act of 40, and the Advisors Act of 40. Okay.
Hmm.
And so under that, you have to run a 506B or C. So here's the good news, it's actually inclusive of those things that we talked about, because it requires a private offering.
Hmm.
Okay? And the private offering is either the 506B or the 506C. Then it's limited to 100 or fewer beneficial owners. So
Hmm.
yes, there is a cap to a private investment company. Okay, there are larger funds. This is my sophistication and the things that I create. I really don't create like, these wild $400 million investment vehicles that can invest in what. That's just not. I do well enough
Hmm.
in my arena. These are the things that have really been hyper successful in the context of multifamily and commercial real estate. Okay. But with that, the third prong being the Advisors Act is because you are advising into the investment in securities. Again, when you file a Form D and you are the sponsor, you're filing that these securities are equity
Hmm.
and that they involve commercial real estate. When you file as a fund of fund, you're doing equity generally. You could do
Hmm.
debt, but generally equity, and you're real estate other. And the real estate other is because you're investing in real estate securities, not real estate. And I need
Hmm.
everybody to understand that, because most of the time when I'm on business development calls or talking with clients or proposing the solution, they need a couple takes at that.
Hmm.
You're not you think you're investing in commercial real estate, and you are. What you're actually investing in is a distribution. Okay. And you are to a great extent, obviously, when you're direct to the commercial real estate. But in this case, you're not investing, you're investing in an LP position, okay, for the commercial real estate, one level removed.
Hmm.
Okay. And so because of that, you have these rules to comply with. When you and I were kind of talking about this and setting this up and talking
Yeah.
about, what content we wanted to bring, you'd also mentioned a 3C7. Now,
Hmm.
3C7 actually involves qualified purchasers. You're going to know those more colloquially as a family office.
Hmm.
Okay. But it's really just an entity who holds 5 million or more in assets. Okay. At that point, they're a qualified purchaser. They're like an accredited investor on steroids, but they get this exemption where they don't have to go through any registration process, etc.
Hmm.
But again, the hallmark still is that you fill out the advisors at part one of the form ADV, which is another sort of notice document, if you will. And it looks like it's kind of a bolstered, boosted up form D.
Hmm.
Okay. And it's got a lot of repetitive information, principal office, how many people are working on your staff, how much is your raise, blah, 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 things of that nature. What's the strategy, you know, stuff like that. Okay.
Yeah.
And so those three things comprise these requirements to not only be exempt on the offering level itself in the 506B and C, but also from filling out the entire form ADV. That's actually the document required when you register the offering, or if you're a registered investment advisor. Okay.
All right. So with the 3C1, I mean, you're limited to 100 people. Now, as far as little mechanics go, my understanding of SEC regulations, according to many attorneys and, the podcast that I've listened to is if you're raising capital for a deal, you actually have to do more than just raise capital, right? So if I'm part of a
Correct.
506B, I have to do more than just raise capital. Otherwise, I am selling securities and I don't qualify for the Reg D exemption.
Brokering.
Brokering.
Brokering. Correct.
Okay. So does the fund help me get around that?
So yes and yes
Mhm.
and no. Bear with me because I don't want people
Okay.
running out being like, Nick on
Yeah.
this meetup. So yes. And
Mhm.
the difference is, and there's not a huge opinion on it out there, okay? But generally when you qualify as a venture capital fund, you're not brokering an investment because you're not just getting compensation for connecting the investors direct to the
Mhm.
asset. All right. Now, if I got paid $50,000 or 5% of the GP for giving you these 5 investors who each of whom contributed $100,000, that's brokerage.
Mhm.
Okay. Now, if I'm part of the GP and I have substantive roles and I substantively participate, okay, that looks like major decisions. That looks like helping underwrite. That looks
Mhm.
like, yes, doing investor relations, communicating, getting involved in these other responsibilities that are germane to the operation of the asset. Then the perception is not brokerage.
Mhm.
You're actually and existentially an operator.
Yep.
And so that requirement, there is no brokerage. Where again you just get a rebate or you get some kind of GP and then you're otherwise passive, even in the GP
Mhm.
side, then that has been ruled in certain contexts to constitute brokerage. Now, in the fund of a fund model, by virtue of being a venture capital fund manager, you're able to bring that income in indirectly through an LP position, not direct as not the constituent members of your fund going direct to the asset contributing there and then you getting GP.
Mhm.
Your fund is an LLC. That LLC takes its limited partner or class A position, if you will, in
Mhm.
the underlying investment with a sponsor. And then in the interest of ensuring that the interests of your fund are protected, then you're participating on the GP side.
Mhm.
Now you're bringing capital solution. You're participating in a GP. It's an arm's length negotiation, and it's not a direct brokerage. It has been found, and again, it's a facts and circumstances determination that does not constitute brokerage, and that it is a much better and much more compliant process in participating with the GP. And if
Mhm.
anybody here, once you start swinging a big stick, all right, you're going to start entertaining pref equity partners. Okay, slightly different variation because they don't typically have ownership. They'll be higher up in the org chart. They'll get
Mhm.
pref equity, but you'll also see some of these other fees that they put in to become a pref partner. Whereas somebody might conceive that, well, obviously that goes to that fund manager. They're not distributing
Mhm.
underwriting fees of $30,000 to their investors necessarily. Maybe they are. Typically, they're not. But they don't perceive that as brokering the security. Okay.
Mhm.
Now, sometimes those people have RAs, registered advisors, or are direct with a broker dealer or something where they're fully compliant. But the point is that when you're dealing arm's length, you're a manager of a fund. You're not actually brokering securities because you're not brokering, you are investing. And
Yep.
so that is not brokerage. And you can participate in GP, negotiate your own percentage there, and still be in compliance with SEC on both sides. Not only when you're direct with the
Mhm.
sponsor, but also with respect to the governance and administration of
Okay.
of your fund.
Now some more kind of rubber meets the road details. If you're doing a fund as part of a 506B, is there still a limit to 35 non-accredited investors? I mean, does that count, fund plus whatever the sponsorship brings in?
So it's 35,
Yep.
just flat out. And if you continue, and they can stack it. If you're like, hey, we went to this multifamily and now we're doing like a second round, which would be weird in
Mhm.
this context. You see it more in business investing and other things where maybe there's multiple investments made, but they'll actually stack that
Mhm.
because they're looking at the underlying asset and the capital that's being raised for that particular purpose.
Mhm.
But you're not. So I create these things called kind of SPV funds that give a little bit more discretion on the investment level. So instead
Mhm.
of it being a blind pool investment, the subscribers actually have the opportunity on a first come first serve basis to contribute to that particular investment.
Mhm.
Okay, and that's just proven to to just be a cleaner way in effect to do it.
Okay. Now, you mentioned something, I mean, different types of or different ways to invest these funds. You talk about, a blind fund. Can you explain what that is and what the other alternatives, basically how you can use these types of structures to invest in real estate?
Yeah, and there are countless.
Hmm.
So the couple that we touch on today in the brief amount of time that we have is really just scratching the surface. And
Yeah.
if you're with a practitioner like me, I can help design something that aligns with your strategy, and I've done that. I've done with a couple of people that I see on
Hmm.
this call. But ultimately, I guess the specific question is open ended, closed ended.
Hmm.
Open ended is not, it's big league. Okay,
Hmm.
having third party fund administrators, fund manager doing big stuff where you don't have a predetermined raise, you don't have any pre-identified assets, you kind of have a strategy. You're doing a net asset value, which is a calculation of the contribution against the contributions that exist and the value of
Hmm.
the fund, and it just gets very complex. And I've just found that, look, even the most simple of funds has a fund administration component to it that you shouldn't take lightly. Okay. I
Hmm.
mean, this is real, like, full-time job type stuff. If you're really trying to get out there and make a huge difference. And so with my operators, and again, I'm only speaking for myself and my practice, I've noticed that the closed-ended funds are just easier. They're
Hmm.
easier, I think, predominantly, let's be honest, for you to communicate to your investors. If you send them 195 pages of documents and you can't explain it to them, you're not getting their money.
Hmm.
Unless maybe their friends, family, close, or they've earned, returns with you before, and they're like, look, Nick, you made me a bunch of money in the last deal. I trust you. I can promise you that in the back of their mind, they're like, man, I hope he knows what he's doing.
Yeah.
But ultimately, the closed-ended funds are better. Let's
Hmm.
create a fund. It's $5 million. Here are the number of units we want to take. Okay. And then let's raise, we can acquire along the way. People are going to continue to take units. And it's a cleaner way to do that.
Hmm.
Okay. And then while you're pulling in funds, you can go to your sponsors as you're trying to negotiate positions and things. And now you have almost a pre-qual letter and say, hey, here's the amount of capital that I've raised. What kind of returns can you bring back to the fund? And then you can
Hmm.
negotiate there with a bit more leverage versus saying, hey, if you let me raise for your deal, if you will, which again, just be careful because of the brokerage perception. The later
Right.
you are in the deal, the higher the perception, okay, and presumption, if you will, that you're brokering.
Yeah.
The closer you are to the formation of the GP and you are with those members, the better the perception is going to be, right?
Hmm.
That you are a true general partner and you weren't just brought in. Particularly now, again, this isn't necessarily an issue when you're dealing with somebody who has a fund, of course,
Yeah.
but those who do not and are trying to do the traditional, well, just slap me on the GP and give me, I'll be the note taker,
Yeah.
and things like that. That they're trying to get around it.
Now you get suspect because you're late in the game. It appears like brokerage. Now I'm gonna just reiterate something that you said, and this is one of the biggest advantages to some of the fundraisers. If you put together a fund and you can bring, say, $1 million to a syndication, you can negotiate better returns, and that's one of the benefits to bringing funds as opposed to coming in as just and I would say just a capital raiser, but obviously there has to be some substantive other work that you're doing for the GP as well. But if you look at the differences between the two, bringing $1 million as part of the GP, everybody's going to fall underneath the same LP structure. Bringing $1 million in one pop in a fund, you can potentially go to that GP and negotiate better returns for your investors. And I think that's one of the benefits
Absolutely.
to using the funds.
That's exactly right. I mean, look, when you go, I mean, you can apply this to residential. If you go with a
Mhm.
pre-qual letter versus like, well, I'm pretty sure I'll qualify. No, like when you have that pre-qual, you're going to be taken more seriously.
Mhm.
And then to your point, your ability to deploy that capital and how quickly you can deploy it, right?
Mhm.
That gives you an advantage. Hey, here's what we're expecting. We want, X number of units or X percentage of class A, we want this pref, et cetera, et cetera. And here's what I can bring for capital solution. And in fact, that's exactly what pref equity partners do as well. And so it doesn't always have to look like a combination of pref and common. It doesn't have to look like just common. When I say common equity, I mean actual percentage of distributions, not just that preferred return where you're kind of getting in, getting out. And then also, last thing, you can still capture your depreciation, but check with your financial professionals. I'm not a CPA. I have a substantial working knowledge, but ultimately I don't know your full tax liability. And frankly, it's not worth my time or yours really for us to kind of speak academically on tax implications. Get a good CPA, partner with that person as much as you need good counsel, right? Hopefully you call me. That's hopefully I've scared you enough and educated enough that you call me. Okay. But I need you to do the same thing. I need you to do the same thing with your financial people. Build a team. If you think you know it all, God will humble you. Let's be honest. All right. But you can still capture depreciation in most arrangements. I can still work on the allocations of that. We can give some to the GP if people are in already tax advantaged vehicles that can't accept those tax credits. We'll deploy those back to typically to the Class B fund manager, and that's actually constituted countless money in losses that my fund managers were able to take that would otherwise have been lost. You need that in your operating documents, because ultimately, if a CPA is preparing your tax returns, they are in fact reading your operating agreement. They're looking at that. That's their manual on how they're going to handle your filings and issuing K1s and putting all that content in there. So can't underscore that enough.
So, and I'm going to double down on a comment. You talk about the tax advantage funds, like your SDIRAs, your solo Ks and vehicles like that. They can't handle depreciation. Depreciation is not going to help them. And I appreciate that you brought that up, because I just learned something. So, I mean, if you write your operating agreement properly, you can actually divert, and tell me if I'm restating this correctly, if I've understood this correctly. You can take the depreciation that would have gone to that tax advantaged vehicle and divert that and spread it amongst either everybody else or just the GP, or however you want to allocate it, correct?
That's exactly right. Guys, at the end of the day, your operating agreement is a contract. The IRS isn't like social security number or not at all. It's not a no soup for you kind of determination. It's a look, here's the contract. The CPA is going to do the filing based on what's articulated in the contract. You want to put that in there. We'll actually designate and bifurcate the class that they can accept it and not. So we got A1s, A2s. Any tax that would otherwise flow to A2s is now reallocated to the Class B member who accept them pro rata, things of that nature. And then boom, capture it, bring some extra losses. We all know we need those these days. All right. Especially when we start killing it, bringing in a ton of income. Y'all send me some, or just here's an idea. Allocate all those lost tax credits to me. If you need anywhere to put those, send them over here. I'll send you my info for K1.
You know what? And if he can't take them all, throw them my way too. But
we'll do a JV, Brian, and we'll take them together. But
sounds like a great idea. And I never realized that, but it makes perfect sense, because it's so lesson learned. If you're doing a capital raise and you have a lot of people who are using the SDIRAs and different types of, already tax advantage vehicles, definitely bifurcate your shares, have A1s, A2s, however you have to do it, however your attorney has to do it, to be able to redistribute that depreciation advantage to the people who can use it. I think that's a great tool right there. So, lots of good stuff there. So, let's see, we're about at the hour mark right now. Any parting shots on funds, setting up funds, and how to navigate that process besides, find a good attorney?
So just be thinking, if start asking questions, go into a discovery phase, figure out what your market of investors is interested in and comfortable with. Maybe that looks like something where there's a bit more discretion. Maybe it looks like something where they're giving you all the discretion, and then let that inform you as to how you structure a fund. Okay. You can you can take that strategy and we can create and customize documents for your strategy. And also, it doesn't have to be just equity positions. I do funds all the time where we're taking capital contributions that are deployed as debt. It's a debt fund. Okay. And then they're lending maybe on short term, maybe there's enough there. This is particularly popular. I know that we're more multifamily focused, but in single family rental and single family homes and fix and flips and other things where the access to capital, it's not that it's difficult, it's that it's time prohibitive, right? You're trying to go buy this piece of property and you have a limited amount of time. And so they want to have a quick capital and liquidity solution. And so we create things for that. So it's really scheduling time with someone who can think through your strategy with you and kind of design something custom. This is certainly not something you want to type into the search bar in LegalZoom and print out whatever that is and take that to market. But having a conversation with somebody who can help design, who cares about you, who cares about your well-being, who keeps you out of the orange jumpsuit, does all your filings, does them timely, and just wants to grow with you. That's who you need to find. I'm that attorney, but there's a bunch out here. There's a lot of really good people and a lot of really good attorneys. And so just link up. I tell people all the time, like, oh, I went a different direction, I went with a different solution. As long as you are comfortable with your counsel, that's all I can ask. I just want to know that you're protected and perhaps there's a chance down the road that we can work together, and I'd love to earn your business. And so I'm a phone call, email away. It takes me a couple of days to get it scheduled, but I try to be as responsive as possible on that initial outreach. And apologies to those of you who have seen me wait a business day or two, Jonathan, before respond. That's actually just you, Jonathan. But just reach out and let's chat.
Now, I just realized there were a couple of questions, should be hopefully quick hitters, that I missed in the chat, from Cody Lewis. What's up, Cody? From Charleston. He says, what's the status of the SEC conditional exemption on finders assisting small businesses with capital raising?
Yeah.
I don't know.
So it's academic at this point because nothing's been promulgated. There's your $5 word for the night. Okay. They've talked about things and put it up for comment. But to my knowledge, at least as of a short time ago, I think within the last 60 days, I haven't seen anything come down. Look, I've talked with enforcement attorneys that work for SEC in multiple regions and have understood that the directive has been somewhat to stand down on the brokerage thing. That is not read or should be construed as license for you to go out and broker without being a registered representative, registered with FINRA and having broker dealer. But that the spirit of the law is changing. Apparently is about as quickly as the position on marijuana federally, which is out for comment just perpetually. So just don't go doing anything yet. Stick with your 506Bs, stick with your 506Cs. There's some state stuff, but securities generally are federal. They trump state. I've seen like Georgia has if you everybody's in Georgia, you can do the special security. Well, you're still dealing with federal securities. So just be wise, only go with black letter law. Don't worry about things that are out for comment. You can get hopeful, but don't get reliant. Hopefully that answers your question, which probably didn't.
All right. And then from Sunny, what happens if a fund buys and manages the real estate asset itself?
That's what you want to do. That's what you want to do. That's what you want to do. You can go be a fund of a fund, be piecing stuff together. The whole goal is to operate. All right. Put that team together. Some people may disagree. Oh, no, the money's in the capital, money's in the fund. Yes, but remember, you're diluting your fund investors because you've got to go a second wave to deliver and you've got to take some chicken off that bone. Okay. Ultimately, I think, in fact, y'all, this is opinion over fact, but I find that my most successful clients are getting direct. They are getting direct with the asset. They are sponsoring their own deals. They're getting the majority of the acquisition fee, of the asset management fee, of the upside at sale, of the waterfall, and performing and outperforming their thresholds and their hurdles. Okay. Ultimately, you can do that in a fund, but the good news is that if you create your fund that's designed to be a fund of a fund, yes, of course, I give you the discretion and latitude to be able to take assets direct. But still in your Form D filing, you put real estate other. You can always, you don't have to go back and amend or anything like that necessarily. But you could undertake to be sponsor direct and use those funds instead of taking an LP position, of course, taking a GP position. Now you can JV with other people, pool the money together. Now you don't have, now you don't have an issue at all because your fund could, in effect, be the JV partner. Okay. And you can still carve out money and do all that, and we can get creative on that. So hopefully that is close.
All right. Another question from Rakeem: does time prohibitive also apply to seller finance multifamily deals as well?
Well, that's a big question. I mean, no, because I mean, seller financing is instant. I mean, that's just, I mean, that's just, that's just securitizing the interest, right there from the seller. You just need to figure out how does that affect your overall underwriting figures, because if you're privy to a mortgage, then you have seller financing. The lender's going to want first position. They're not going to take second position. Seller's not, I mean, yeah, they're not going to let you even file necessarily a second mortgage. You better ask that question early, right? But they're not going to let that guy, I mean, it's going to be an unsecured position by that seller. And so, yeah, if you can do that, that can help get you there. They can sometimes count that towards equity in your LTC determination and other things. But like, if you can get that, great. But yeah, that's instant cash at close, because you're now taking out a chunk. It's more in contract, not an escrow. And now you're just having a seller financing, a promissory note, pledge agreement, security agreement, some of these other things, if they're allowed. You just probably won't be able to file anything in the record title because of the lender's position on that in the loan agreement, where they'll make it an acceleration or sweep event if you have something filed in the record without their approval.
All right. Next question, another one from Cody. He's your neighbor in South Carolina. Maybe this is why he's asking. Do you guys have reciprocity in other states outside of Georgia? And Cody, I assume you're talking about the title and closing end of what he does. Is that right?
Hey, Brian. Yeah. So I'm actually married to a closing attorney in South Carolina. So she handles it here, but we're also looking at outside states that she doesn't have reciprocity, because she only has reciprocity in DC.
Okay.
Well, it just depends. Look, in transactional law, you don't actually have to be bar licensed in the state in which the property is located. Okay. So you can transact commercial real estate across state lines without any issue. Sometimes drafting conveyance deeds and other things, there's a state requirement that you be licensed there, but we pass that off to the title team anyway. Just so everybody knows here, we own a title company called Continental Land and Title, and we serve Georgia, Alabama, and Florida. Outside of that, I use Madison Title. Yona's my guy, Elliot Zachs, Baraka Greenberg, they're all fantastic. We're seamless. We do hundreds of millions of dollars together, per year. And so that's our title solution. They'll prepare conveyance deeds. A lot of times we'll have the seller counsel. In my PSAs, I put it on the seller to create those. And typically the seller has local counsel can do that. Sometimes we work together, and again, we task that. But ultimately, the approval of the conveyance deed is held by title, because they're not going to file something and insure over anything without approving it. So in terms of reciprocity, that would speak more to like if I were trying to litigate a contract or enter courts, at which time South Carolina has, so since I've been licensed for more than 5 years, I can do some waiving in. You can always do pro hoc vice, which is where I waive in through another licensed attorney. The reciprocity, I think we may only have with like West Virginia, which is kind of silly. We're not part of the UBE states, which is Uniform Bar Exam. We're state specific. But yeah, we can transact nationally, and then we'd love to be your title solution here. And then I'd also be happy to liaise the process or connect you with Madison and the folks over there, because they do an outstanding job.
All right. Another question, let's see, from Felipe, asking about getting around the brokerage issue. He said, would raising capital plus participating in deal sourcing plus another involvement get around brokerage issue?
It's facts and circumstances, and that's not my determination. If you believe it's substantive and you believe that you can defend your position on how substantive it is, and I know it's a lawyer answer, and that's what I am. But ultimately, be substantive. If everything you do comes back to capital raising, then look, walks like a duck, talks like a duck. It's going to be difficult to articulate your argument that you weren't brokering. But taking on additional responsibilities rebuts the presumption. It may not overcome it, but it can rebut the presumption that there's brokerage. And the more of those things that you can have delegated to you, and the more that you can demonstrate that you perform certain things beyond just capital raising, the better defense you'll have and the better rebuttal you'll have to that presumption. Because it is a presumption that you're brokering, but it's rebuttable. And again, the more rebuttable information you provide or evidence, the better for you.
All right. All right. And then somebody asking you to touch on smart contracts. Is that something you do quickly?
I mean, yeah, I mean, there's a couple of different ones. I don't really deal much in those. The other ones are safe agreements and things. And, you know, I've got my wheelhouse is rocking and rolling, man. So, you know, not too much in smart contracts. It's a little bit more techie. But we don't, you know, we just not in multifamily. I don't see much of that. And we've done safe agreements. And I've got a general counsel practice as well, and advise a number of businesses in a number of different industries as well. And we'll contemplate certain things like that, you know, for a solution for them. But generally, particularly for this audience, not a tremendous amount of applicability. But the person who asked that is certainly welcome to email me, tell me I'm full of it, and tell me why and how we can deploy those. And if you're right, I'll just sell your product.
All right. Sounds good. Yeah. Salesman with a law degree, right? There we go. Well, hey, Nick, thanks so much for being with us tonight. You know, I learned a couple of new things, which is awesome. I love bringing guests like you in, and I think you really hit the nail on the head, brought a lot of, you know, really strong pieces of wisdom that, you know, people can use. So thanks a lot. And I dropped your contact information just from your email signature line in the chat for anybody, but anything, what's the best way for people to contact you and take advantage of your services?
Well, I'm on LinkedIn a lot. In fact, I saw another one of my friends, not a client yet. We've been chatting. Joseph Bramante, what's up, man? Good to see you out here tonight. I got a couple of deals in Houston. I need you as a client. But ultimately, you know, you can reach me on LinkedIn, you know, just Nicholas G. Moore, and then I think Nick in parentheses. You can type in Robinson Franzman and find me that way. I try to be responsive on LinkedIn. It can take me a couple of days, or you might get dropped down in the messages a little bit, but I try to bring those back up and reconnect with you. You know, beyond that, the email is pretty easy. Brian, like you said, I think you dropped that in the notes.
Yep.
And Nick, N-I-C-K, at rfllplaw.com. You can check us out there. We've got some bios about us and our sophistication. You know, we do pretty close to $1 billion a year in transactional volume between Todd and myself. We're growing. We're taking over the game. We're trying to be that fully integrated solution. But you can call, you know, however, look, everyone on here is smart enough. If you want to talk, you know where to find me. But I'd say LinkedIn would probably be easiest, or you shoot me an email direct. You already know that goes straight to my phone, and I'd be happy to connect with you.
All right. And I just redropped everything in there. So you got his LinkedIn information, or link to his LinkedIn profile, and, you know, everything you need to contact him. So I appreciate your time, and we are going to move towards networking. And Nick, you're welcome to stay if you want to. If you need to jump, that's fine too. But once again, appreciate everything that you brought to the table tonight.
Thanks, Brian, man. Keep doing your thing. You're making more impact in people's lives, I think, than you realize. You're on the right track with what you're doing, man. And, you know, let's connect again outside of this and just stay in touch. I'm going to have to jump off. I got to go be dad.
No worries.
I know so many of you know how that works. But one-on-one, if you ever need me, please reach out. I'd love to bring you into the firm.
Absolutely.
You,
if you didn't see it, you just got about 1,000 people say thanks, Nick, or some variation of that in the chat. So
thank you.
On behalf of everybody, thank you.
Thank you.
Get out of here, Nick.
All right, guys.
You messed up networking time.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, you're missing out. Get 30 days free by clicking the link in the description, or go to thetribeoftitans.info, and we'll see you there.